Greetings of the day. It's my pleasure to welcome you once again to our exclusive webinar on anti-money laundering and the financing of terrorism and proliferation. I am Gayatri, host of this session. In this webinar, we will delve into the complexities of AML regulations in UAE, providing you valuable insights and best practices to enhance your organization's AML compliance. Today, we are going to explore a vast areas in AML, including topics such as overview of AML regulations in UAE, applicability to various sectors such as DNFBPs, financial institutions, banks, insurance companies, virtual asset service providers, etc. Then FATF of major recommendations, risk assessment and due diligence, AML or CFT compliance, red flags in AML, penalties, and tax frauds. We have also included some practical examples in order to simplify and help you to understand the topic better. Before we proceed, we hope that everyone watched all of our previous webinar series on corporate tax. If anyone missed, we have also uploaded the same in our YouTube channel, and we encourage you to watch, subscribe, and support us by sharing your valuable comments and thoughts. You can also share your feedback as a Google review, for which we will attach a QR code. You can just scan and leave your reviews over there. To conduct the session smoothly, we have muted all the attendees, and in case of any doubt, you can just comment below so we can attend the same in Q&A session towards the end. Now, I invite the speaker, Mr. Sijan K. Reddy.
Thank you, Gayatri, for your brief introduction. Ladies and gentlemen, good morning, good afternoon, good evening. Thank you for joining me today for our 6th webinar series. As a part of International Fraud Awareness Week, we are conducting fraud awareness education to the general public. I encourage you to give your comments and feedback on our social media after uploading this video. This will help us reach more audience and spread awareness about the concept of anti-money laundering. So anti-money laundering, the financing of terrorism and proliferation. This is the topic we are discussing. So we will discuss mainly AML basic, meaning international standard on AML and CFT. So the agenda for today, International Fraud Week, what exactly we are discussing, and a report to the nation by ACFE, then AML overview, what are the AML issued in UAE, then FATF recommendation, what are the major recommendations issued by FATF, RBA analysis, a risk-based approach, then risk analysis examples, then tax fraud, then preventive methods, then summary, AML summary. So what is the International Fraud Awareness Week? Every year, ACFE used to conduct International Fraud Awareness Week from November 12 to 18 to give an education to the general public about the fraud awareness education, whatever the crime happened during the during the year. So RBS Auditors is proud to be a part of Association of Certified Fraud Examiners to the Fraud Week and Fraud Awareness Program. So what is the anti-money laundering? Why the AML is so important? See, if you see the International Monetary Fund estimate that 2% to 5% of world GDP or $500 billion to $2 trillion is laundered every year. That's why anti-money laundering law was established to make it harder to hide the money. And what is meant by AML? Money laundering is an illegal process of making large amount of money generated by a criminal activity such as drug trafficking or terrorism funding by making it appear to have come from a legitimate source. So the money from the criminal activity is considered dirty, and the process launders it, make it to look clean. So if you see the GDP, real GDP growth of the 2023, October 2023, you can see the region-wise. Africa region, then Asia Pacific region, then East Asia, then Eastern Europe, Middle East region, then country-wise GDP rates. You can see UAE, then Turkey, then India country rate. So this is the IMF provided by the GDP, real GDP growth in the entire year. And if you see that in that one, 2 to 5% of GDP, global GDP is laundered every year. That's why AML is introduced. So let's look at report to the nation by ACFE. What are the key findings reported by ACFE? So every year, ACFE will be conducted a survey, and on the basis of the study, they will conduct the 133 countries about whatever the case reported during the year. So if you see the 2022 details, 2,110 cases has been reported. In that one, 3.6 billion losses has been laundered. That means that's a loss to the country. each country, respective country. And if you see, the average loss per case is $1.7 million. And out of these $1.7 million, 21% of case having 1 million and more. So if you see the loss percentage, 5% of the revenue is fraud. That means 5% of the revenue is laundered every year. And if you see the 2021 statistics, 4.7 trillion loss fraud globally. So if you see in this category, then we will know that what is the fraud impact. And if you see the region-wise, United States, there are 675 cases and 36%. And next, Africa region, it is 429. Then Asia Pacific, 194. Western Europe cases, 145. Middle East, 138. Southern Asia, 138. Latin America, 95. And Eastern Europe, 78. And another case, loss per region. Each region-wise loss they have declared. And in case of Middle East region and North Africa, it is 875%. And 75% of 75 percentile and 25% loss per case. If it is 25 percentile, it is a 20,000, and 75 percentage, it's 117 loss per case reported during the year. And if you see the UAE scenario, out of 138, 60 cases reported, and that is equal to 43% of cases in the UAE. That if you compare it with the Middle East and Africa region, North Africa region, out of 138 cases, 60 cases reported in United Arab Emirates. So what is fraud?
What does fraud mean to you? It's probably not something you think about every day, but fraud affects every part of your life. Your home, your car, your job, your healthcare, your education, your bank, your travel, your inheritance, where you shop, your city infrastructure. And identity thieves and hackers are working around the clock to commit fraud. So what is fraud? It's more than just what makes headlines. Fraud is the intentional manipulation of the truth for financial or personal gain. Fraud perpetrators target businesses, governments, and individuals. Wherever there is money, there is the potential for fraud. So how can you protect yourself? Be curious about where your money goes or where money comes from. If something sounds too good to be true, it probably is. Always ask questions. Be alert. Monitor your accounts and report any suspicious activity immediately. Don't wait for fraud to happen to you. Protect yourself by learning more about fraud and how to report it.
So what is a fraud? Fraud means intentional manipulation. Basically, there is an intentional manipulation of the truth for the financial or personal gain. A person or thing intended to deceive others, typically by unjustifiably claiming or being credited with the accomplishment of qualities. So whatever the fraud, it's a main thing, intentional manipulation. So the main word it is used, intentional manipulation. So you can see some of the fraud cases. For example, the recent one, AML related fraud cases. Sam Bankman-Fried, co-founder of FTX cryptocurrency derivative exchange, has been found guilty on all 7 criminal fraud, like wire fraud, conspiracy to commit wire fraud, security fraud, and commodities fraud, and money laundering. And Bankman-Fried is stealing $10 billion from the users of the crypto exchange and lying to lenders and investors. And if you see the next one, it's a report released by Chain Analysis for Crypto Crime Report. In that cases, they have clearly mentioned 2022 analysis. There are 4 exchanges are dealing with money laundering, and that amount is more than $1 billion. And if you see the graph, compared with the 2021 and 2028, 68% has been laundered, 68% increase in overall compared with the 2021 figures. So the money laundering factors are going like anything. And 2 days back, if you see, crypto giant Binance admits to money laundering and agrees to pay 4.3 billion. And Changpeng Zhao, founder of Binance, world's largest crypto exchange, agreed to resign from the company, and he has to pay $50 million fine for the money laundering cases. So the total 4.3 billion fines in Binance and Soho had agreed to pay as a part of a guilty. And this is one of the largest penalty of the Justice Department had ever obtained from the criminal matter. So this report has been issued 2 days back, November 21st, 2023. And if you come to another fraud areas, you can see Silicon Valley Bank. In that case, Silicon Valley Bank had an estimated $209 billion of asset and $175 billion of deposits before its collapse, and the largest in the US bank failure since 2018. That means SVB had surprised the market 2 days earlier by disclosing 1.8 billion after-tax loss from the investment sale, and that is planned to raise the capital. And the class action lawsuit has been filed against SVB Financial Group, alleging that a bank failed to disclose how raising interest rate would make a Silicon Valley Bank unit vulnerable to bank run. So if you see the lawsuit, what is the class action lawsuit? Means a type of lawsuit where one or more plaintiffs bring a lawsuit on behalf of larger group known as a class. So everybody has been given a case to SVB Bank relating to this case. And if you come to the UAE, local one, founder of collapsed private equity firm Abraj fined for $135 million by Dubai regulator. Arif Naqvi, founder of the Abraj Group, has been fined for $135.6 million. Then again with $1.15 million with the former chief operating officer. So the Cayman registered Abraj Investment Limited has adjusted their bank confirmation by adjusting 200 million shortfall has been adjusted. So based on that bank confirmation, in order to produce a misleading bank confirmation and a financial statement, he has personally arranged to borrow 350 million from an individual to make Abraj Group appear solvent. So this is the case relating to local one. And if you see the AML news, you can see UAE imposes 65.9 million fines on 137 firms for not following anti-money laundering rules. And UAE full penalty list they have published. Then UAE fined 225 firms for 77 million in 2023 for violating anti-money laundering laws. So we'll look at AML law in UAE. So there is a regulatory authority. There are different regulatory authority. One is a central bank, financial intelligence unit, DIFC, etc. Then it will be applicable to financial institution, DNFBPs. Then money laundering process, placement, layering, integration. Then money laundering methods, front business, bars, digital currency. Then money laundering red flags. Then international AML efforts. Then FATF recommendation. Then RBA approach, then sanction tax fraud, then CDD, EDD, books of accounts and penalty. These are the areas we are planning to discuss in this webinar. So we'll go one by one. AML law, Federal Degree Law number 20 of 2018, and this one was amended in 2021, and this is basically called the AML law of the country. And after that one, they have issued a Cabinet Decision 10 of 2019, Cabinet Decision 24 of 2022 with amendments. And this is relating to on anti-money laundering and combating financing of terrorism and illegal organization. They have issued various guides relating to DNFBs, supplementary guide for DPMs, delays in precious stones and materials, and supplementary guides to real estate, trust, auditors, accountants, everyone. And a regulatory authority. If you look at regulatory authority, financial intelligence unit is monitored by central bank, and the regulatory bodies DFSA, DIFC, and ADGM, and UAE Free Zone, Ministry of Economy, UAE Securities and Commodities, Real Estate Authority, RERA, then virtual asset and cryptocurrency regulations. So these are the regulatory authorities for AML law in UAE. And to whom it is applicable. The AML law in UAE applies to financial institutions, banks, insurance company, designated financial business person, virtual service providers, and designated financial business means dealers in precious metal and stones, real estate agents and brokers, trust and corporate service providers, lawyers, notaries, independent legal professionals, auditors, and independent accountants. So let's see what is money laundering process. So there are 3 V's involved in money laundering process. One is a volume, then second one is velocity, and third one is venue. How do you quickly move large amount of cash? Then how can you disguise the value? Then how can you exploit the location? So the essence of money laundering is hiding and disguising illegal funds. So if you see, there are a development in the digital world. There is a mobile payment is there, then there is a digital payment is there. If you see the mobile payment itself, the mobile market, it is a 2.32 trillion in 2022 and is projected to grow by 2.98 trillion in 2023 to 18.84 trillion by 2030. So if it is a mobile payment itself, the launderers can simply send the money through mobile. So the mobile market itself is increasing by wire transfer. Then, so there is an illicit fund. Then there are 3 stages it is covering. One is a placement, second one is layering, then integration. So the initial stage is a placement. We will discuss more about the placement part. So placement is the first stage of money laundering process. In this stage, the launderer introduces the illegal profit into the financial system. So at this step, that the legislation has been developed to prevent launderers from depositing or converting large amount of cash to financial institution or taking cash out of the country. So either they will do it like a physically movement to the another foreign country or deposit in an offshore bank account by way of smurfing or small deposit. So what is this? Smurfing means that the AML legislation, they have mentioned about the minimum amount. Whatever the minimum amount, if it is above the minimum amount, you have to report to the AML department. For example, as of now, it's a $15,000. So you will deposit the amount less than $15,000 for each time, then 14,000 or 10,000, then automatically it will not be detected. Cash deposited into the bank, it will not be detected in the initial stage. So if it is not detected, it will be again go to the next stage. If it is detected, automatically the launderer will be captured. So next stage is the layering. So if the placement of the initial fund goes undetected, the launderer can design numerous methods. So either by wire transfer, you can do a multiple wire transfer to a different jurisdiction with a lack of cooperation with a foreign court. That means tax haven countries, then purchase of assets, then converting cash into monetary instrument like a traveler's check, etc. Then loan back arrangement, loan buyback arrangement, a digital currency. So this is a layering. This is the most difficult area of detection, because once you have moved your physical currency into the institution, then it's very difficult to find out. So this is the second stage, that is layering. And the more layers, the harder it is to trace the fund, particularly if the money is moved to offshore. And the third one is integration. Final stage in money laundering process is integration. So under this stage, the integrated back into the economy. So once the layering is over, then automatically it is integrated back into the economy. Like you can see the real estate investment or securities investment or luxury asset or loan. So this integration creates a paper trail, such as a title deed, invoice, loan document, etc. So usually the launderers, they will not do it like a home, cars, jewelry, and furniture. So typical launderers will not use all funds in this manner. They will use they will design in a different methods to launder the fund. So this final stage, it is integration. Integration is once it is integrated, it's very difficult to trace the initial stage. So first stage, it will be like a physical cash, and the final stage, it will be, you will be having a paper trails such as a title deed or invoice or loan document or transaction document or financial transaction or check, etc. So we'll see what are the methods or scheme used for money laundering. One is overstating or reporting of the revenue or expenses. That means either fictitious employees or inflated invoices. Fictitious employees means somebody is working, 6 employees are working in the company, but only 2 employees are physically working. So the rest of employees, fictitious names will be provided, then that salary has been reduced from the business. Then another option, it is like a bars, restaurant, and nightclub. Most of the sales are made in cash, so easily they can launder. And wholesale distribution, cash payment for wholesale purchases at a discounted rate. And real estate involve multiple parties like brokers, agent, appraisers, mortgages, indirect investment in real estate, back-to-back loan scheme, loan by presenting a collateral. You have purchased one real estate, with that real estate money, laundered money from the real estate, with that real estate, you approach for a bank with a mortgage, by mortgaging that property and get the loan. And after a short period of time, you are setting off the entire loan. So that is also a money laundering scheme. And another one is a digital currency, virtual assets. And other methods like banks and other depository financial institutions at individual levels, agents of the bank to manipulate, control, or procedure. And other option, money service business, MSB. It's a alternative remittance system that is relating to the currency exchanges, check, cash, travelers check, monetary transmitters like Hawala, Hundi, all this alternative remittance system. Insurance companies, saving products, health insurance, tax planning products, finance products. So you'll be buying a big saving plan for a health insurance or tax planning for the health insurance. Then casinos, high volume of a cash intensive industry. Then shell companies, non-profit organization for accepting gift, shell companies not having any economic activities. And if you see, FATF have conducted a survey in the last year, 2022. Based on this survey, it has revealed that 37% of countries surveyed have found the sector associated with a high risk category, and only 9% which consider it very low or medium level. So the ML and the TF risk in the real estate sector is very high compared with any other DNFB. And in addition to that one, real estate sector have been found to have a poor level of understanding of relevant ML or TF risk. As of 2021, 78% of fourth round assessments suggested that there is a poor or very poor rating in this area. So this is the survey conducted by FATF. So based on the survey, 2022 survey, risk-based approach to the real estate sector by FATF. Based on that one, the real estate sector understanding of ML and risk is very, very poor. It's a 78%. That means you can see from the graph itself, 47%, then 31% and 18%. And we'll see one example related to misuse of real estate agents to gain introduction of financial institution. So a trustee for a trust established in an offshore center approached a real estate agent to buy a property in the Belgium. The real estate agent made inquiries with the bank to ask whether the loan could be granted. The bank refused the application as a use of a trust and a non-financial portion appeared to be deliberately done to disguise the identity of the beneficial owner. So basically, bank has rejected because it is a trust. Trust is registered to purchase in order to purchase the real estate business. So they have filed a financial intelligence unit relating to this transaction, and the board of trust was found that related to a bank with a suspected link to a terrorist organization. So finally, this has been triggered. Another case relating to smurfing of cash, cashier's check, conceal of illicit source of fund for the purchase of real estate. The US attorney, Mr. P, was convicted on a federal charge of money laundering for handling USD 177,500 in cash from a former client who is now facing prison for drug offenses. Before the money laundering allegation came into light, Mr. P served as a defense attorney and had a lucrative side business as an agent for the professional hockey players. Mr. J, the attorney's client, was targeted in a federal investigation in 2012 after authorities learned for his involvement in large-scale drug organized crime smuggling of operations spanning from California to Maine. And what they did, the laundering was done through a smurfing, and during the investigation, Mr. P admitted that when he received more than USD 10,000 from Mr. J at one time, he brought the deposit into the amount under USD 10,000 to avoid the currency reporting requirement. So the smurfing means that they are depositing the amount within the limit. That means it's a 10,000 USD. You are depositing in a various days with a 10,000 USD. Then automatically it will not be triggered for AML. Then the money deposited into the attorney's escrow account. Then the real estate was bought jointly by Mr. J and Mr. P. Then intentionally removed Mr. J at the time of paperwork towards the end. So at last, at this, he has paid Mr. P for $250,000 paid in installment of $50,000 in cash, all delivered in backpacks. This is the case relating to smurfing of a cashier's check for the purpose of real estate purchase. So what are the red flags of money laundering? One is relating to cash payment. If you are doing a typically handled by check or other form, but you are accepting cash payment, then there is a lump sum payment by wire transfer or foreign currency. Then reluctance to provide normal information for your approaching one customer, but a customer is not providing normal information. Then purchase of investment beyond its means. Then use of LC or trade finance to move money between the countries where such trade is inconsistent with the customer's usual pattern. Then services provided internationally. Then suspicious transaction with a particular ethnic group or nationality. Then financial haven countries. Large amount of money to Cayman Islands, Hong Kong, Luxembourg, Monaco, Panama, Switzerland. Then establishment of large investment policy with a short time, same has been cancelled, cash paid to the third party. So these are the red flag of money laundering. So let's see what are the international AML efforts. AML efforts internationally. That means the UN, United Nations also set a policies for the 93 member states to criminalize money laundering. Then Financial Action Task Force. Then there is a European Union International Organization for 27 countries. Then there is an Egmont Group. This is an informal international network for financial intelligence unit, which are the national centers collect information on suspicious or unusual financial activity. And there is a IMF, then World Bank. So these are the authorities involved in the international level wise AML regulators. And if you see FATF, gray list has been published as on October 27, 2023. You can see the gray list and you can see the black list. And every year, 3 times FATF, they will publish the gray list or black list for the countries. So you must have received some of the mails from the Ministry of Economy or other regulator relating to the blacklist of countries. These are the countries blacklisted by the FATF. And if you are doing a transaction with these countries, then it will be affecting AML law. And we will see what are the FATF recommendations. So FATF, they have given, based on the 2023 report, they have given the recommendation for each policy manuals you have to follow for each respective countries. One is relating to AML or CFT policies and coordination. So risk-based approach you have to follow for the national cooperation and coordination. Then there is a money laundering and confiscation offenses, and confiscation and provisional measures have been implemented in their respective country. Terrorism and financing of proliferation. Then preventive measures like CDD, customer due diligence, then record keeping, PEP, then corresponding bank money exchanges, wire transfer, third parties. Then there is a high risk countries, STR, DNFB, and CDD, customer due diligence. Then there is a transparency and UBO. You have to follow transparency and UBO for all category, including the legal person and legal arrangement. Then there is a powers and responsibility for competent authorities. They are given, these are the powers for DNFB, then regulatory authorities, operational law enforcement. Then there is a sanctions. Then international cooperation, that is international instrument, Vienna Convention and UN Convention. They have agreed for some of the areas, then that they have to follow. So we will see the previous one, FATF recommendation. In that one, first one is the AML and the CFT policies and coordination, that a risk-based approach. We will see some of the recommendation for your reference. So one is a risk-based approach. What is a risk-based approach? So risk-based approach is an effective way to combat money laundering and terrorism finance. So there is a 4 category. One is a risk identification. You have to identify what type of customers you are dealing, which country you are dealing, and delivery channels and the product, what services you are dealing with those parties, and whether it is a third party involvement. And risk analysis. Once you identify your customers, then you have to see the risk analysis, likelihood of risk occurring or impact analysis you have to do. And next one is relating to risk control, policies and procedures, systems and control. You have to keep it in your company itself before applying the AML policy. Risk monitoring and review of the risk analysis, compliance, and audit program. So we'll see each area wise. Customer risk assessment. What exactly customer risk assessment? So while approaching the customers, you have to see whether it is a sanctioned client, whether it is a PEP, politically exposed client, or associated with a politically exposed client, or criminal history, then DNFB, or virtual asset service provider, whether it is a complex business structure, whether high net worth customer or non-resident, or there is no adverse media or non-PEP individual resident cooperative. So you have to categorize the customers on a different category, like this category, then you have to, based on this one, which category the customer will be coming. Either it is in a red category or in a blue category, or in a gray category or a green category or yellow category. So on that basis, you have to identify the customers. So first, risk-based assessment, customer risk assessment, you have to identify. For example, we'll see one example, RBA customers. Company A cyber security firm, operates from an office that seamlessly blends modern and traditional. This is a high-tech paperless workspace prioritized digital solution. The company is led by Mr. X, the CEO. In the given scenario, during the audit, the auditor uncovers that Mr. X is listed on sanctioned list and is suspected of being involved in terrorist finance. So the option available: ignore the findings, consult the legal team, confront the client, or file STR. So the option we'll select like option 4, considering the gravity of the discovery and its potential impact, the auditor must promptly file suspicious transaction report, because there is a failure to do so could have directly linked to the terrorist organization to persist in their activities. So if you see this area, so company led by Mr. X, given scenario, audit uncovers that there is a sanction list in this company. So while checking the customer list, company A, it is listed in a sanction category. So automatically, once the company is listed in a sanction category, automatically you have to file STR. That means you have to file suspicious transaction report. So next one, transaction. So whatever the transaction you are dealing, what type of transaction client is doing? Pay by virtual asset, where the transaction does not match the economic profile, or payment from the third party, or cash payment, high value, very frequent, or agents involved, or cross-border transaction, then nominal transaction, or payment by check or bank, payment from the customer, or did not do any business. So these are the things. So first you are analyzed based on the customer wise. The second one, you have to analyze based on the transaction wise. So transaction means a transaction risk assessment. Based on these transactions, you have to assess the client. Then once transaction is assessed, then we will see the one example to understand the concept. Here, a concise summary of the incident involving XYZ Real Estate Limited. So the company, it is involved in a XYZ Real Estate. So customer is XYZ Real Estate. Nature of business is a real estate development and investment. Jurisdiction registered in a tax haven country known for favorable tax laws. Other information: account type, corporate business account. Usual activity: deposit of large sum of cash without verification of the amount. Incident happened 1/10/2023. Cash deposit amount $500,000 in mixed denomination. Customer behavior: deposited the cash without counting or verifying the amount, claiming it was payment from the property sale. So the option for action, one is report to unusual cash deposit to financial intelligence unit immediately. Second option is conduct a further internal investigation, including a detailed review of the customer's business transaction before deciding whether to report to FIU. And the third option, ignore the unusual cash deposit and proceed with the normal banking activities. And fourth one, escalate the issue to senior management. So these are the options available. So before reporting to the financial intelligence unit, you have to analyze internally. So first one, analysis a cash analysis. So banks teller counted cash and found that amount to be consistent with the deposit slip. So whatever the deposit slip he has mentioned, so that deposit slip and the cash is perfect. Second one, document analysis. The compliance team reviewed the following document. One is a business registration. They have verified the business registration. Tax records. They have verified the tax records. Examined the tax returns. Nothing has been found out. Then property sale documents. Requested and reviewed the document related to claim to property. Then documents were found consistent, but unusual deposit behavior warranted further investigation. And a risk assessment. After assessing the risk, the AML department has risk marked as moderate. So let's see why there is a moderate. So rationale for selection option, first we have to internally you have to review everything, then you have to do a further investigation in order to find out whether you have to report to the FI. Rationale for selection, the unusual behavior of depositing a large sum of cash without verification coupled with a tax haven jurisdiction warrant further investigation. But consistency of deposit amount, legitimate property sale document, and compliance with the local tax. So whatever the paper related work it is fully, it's managed. That means the property document and the related tax document, everything is perfect. So in that scenario, you have to see again, unusual cash deposit behavior may not necessarily indicate illicit activity, but you have to do further again RBA approach. That means a risk-based approach again you have to do. So what exactly means financial intelligence unit? If you want to report immediately to the financial intelligence unit, in that case, you have a clear-cut suspicion about the money laundering fact. So in the previous example, one of the example, it's a sanction list country. That means a clear-cut picture. And the previous other one, it is a sanction list country. Then second one, this case, it's a cash deposited, but there is a chance that. So what you have to do again, you have to do next level of risk-based approach. That means enhanced due diligence. You have to check. You have to find out the customer. You have to find out the seller. Then from the source of the fund, you have to analyze. Then you can report to the financial intelligence unit. We'll see one more. RBA transaction. Its background, it is individual profile. Business is a casino operation. Name Mr. Y. Position owner of ABC Casino. Education, a degree in hospitality management. Family background, single, comes from the family involved in entertainment industry. Nature of work, manages casino, overseas gaming operation, marketing, and customer relation. And type of business, it's a luxurious casino known for grandeur and elegance, appearance, lavish interior, crystal, chandeliers, plush gaming tables, and exclusive VIP rooms. And what are the products? Various gaming options, including slot machine, poker tables, blackjacks, etc. And next one is a virtual currency in casino. Virtual currency can be used for online gaming, betting, or as part of a loyalty program within casino. So we will see the flow of activity. Initial observation, receipt of a fund transfer from unconnected third party. So initial activities happen, a receipt of funds, which is transferred from unconnected third party. And the second pattern, these funds are quickly used to purchase virtual asset. So there is a transfer, fund transfer. Then that fund has been quickly used for purchase of virtual currency. This pattern has been observed over a 3-month period. That means you are changing, there is a fund transfer, then again you are purchasing virtual currency. Then this pattern is changed over a period of time. The connection between the third-party funds and purchase of virtual currency raises question, but found a part of legitimate business strategy. So what is the option available? Report the transaction to the FIU immediately. Second option, conduct internal investigation. And the third option, ignore transaction as a part of a casino's virtual currency strategy. And fourth one, consult with the legal team. So first option, option one, because there is a high risk pattern. The pattern of transaction indicate money laundering, immediate reporting given the scenario, natural suspicion, immediate reporting to financial intelligence unit because the virtual currency is involved in this transaction. Second thing, there is a rapid movement of funds through virtual currency that will trigger a red flag for money laundering. So there is a third-party fund transfer, then that within that fund they used for purchase of virtual currency. Then again that virtual currency, then that transaction is triggered 2-3 times. So there is a red flag find out, then automatically you have to report. So we have already completed customer wise, transaction wise. Now you will see the location wise. What location? So if the company is situated in a blacklisted countries, we have already discussed the 3 countries are blacklisted by FATF. If it is a blacklisted company, then blacklisted country, then automatically you have to report to the FI. Then second category, jurisdiction under increased monitoring or infamous for corruption. Then tax haven countries with a weak ML or FT laws. Then vague financial reporting, countries with a strong business, transparent financial reporting, stringent ML or FL laws, fight corruption, and not subject to any sanction sheet. So if you see this starting stage, it is like a red, then it is a change, then color change, then it is green. So what it is means that this means a high risk country, then medium risk, then it is low risk. So on this basis, you have to analyze each country wise. If the customer is based on the respective country, then you have to see whether it is a high risk category or low risk category or medium risk category. Now, next one is RBA assessment. It's a product based assessment. Again, there is a 3 category, whether it is connected with ML or FT laws or dual use of a goods, small volume or high volume, easy ownership transfer, luxurious items, unregulated industry, big documentation, strong government regulation, transparency around ownership, difficult movement, routine goods. So on this basis, again, you have to do the category. Then next level, service delivery. What type of delivery they are giving, whether it is with meeting or without meeting, or there is no face-to-face meeting, there is no agent involved or personal interaction. So you have to analyze what type of delivery they are giving. In that basis, whether it is a negative category, neutral, great, or excellent. On this basis, again, you have to do a service delivery channel related risk you have to analyze. Then next one, it is a dangerous goods norm. So whether whatever the transaction you are involved, whether it is a dangerous goods, whether explosive, gases or compressed liquids, then flammable liquids, flammable solid substance, toxic or infectious substance, then radioactive substance, then miscellaneous, then non-DGN goods. So based on the product, again, you have to categorize whether it is a high, low, or medium. Now we will see these are the risk-based approach we have already discussed. So once you establish the relationship with the customers, you have to find out the first part is relating to customers related risk approach. Then you go to the transaction related risk approach. What type of payment they are making, whether it is a cash payment or bank payment or it's a lump sum payment. And the third one, it is relating to the country wise, which country they are operating. Then the fourth one, it is country wise. Then fourth one is relating to the type of delivery, what type of delivery they are giving. It is on a face-to-face. And the next one, it is relating to final one, it is relating to type of goods, DGN goods. Like that, you have to analyze. Once you analyze the customer, then you can see whether it is a low or whether it is a medium or high-end category. Now we will see what is the sanctions, meaning of a sanctions. So what is the sanction list? Sanction means a list of red flags certain for individuals, entities, and countries that fight against a financial crime. So simple meaning means it's a blacklisted individuals or countries, wherever it's then automatically it will come to a sanction list. So individuals will be there, then entities will be there, that every year that will be added to the, not every year wise, it's a day wise, it will automatically add it to the sanction list, and you will get a notification saying that these are the entities or these are the individuals already listed in the sanction list. So if you are doing any transaction with these entities or these individuals, then you have to immediately report to the FIU, Financial Intelligence Unit. That means whatever the reporting system, GoAML, through GoAML, you have to report to them. So this is a sanction list is a publicly listed directory of entities and individuals. So it will be available all over the world, and you can see that the sanction list of the entities and countries. And what will be the impact? If it is a sanction list, restriction on financial transaction and business dealings, whatever the financial transaction or business dealings, it must be restricted. Then travel bans will be there. There will be a visa restriction. Then there will be a reputation and perception of individuals and entities on the list. We will see what are the list of resources available. For UAE, there are three sanction lists are there. One is the Arab League, then Terrorist Financing and Targeting Center, and the Gulf Corporation. So these three regional bodies that issues a sanction in UAE. And there is an additional one. It is one is relating to local list, and the second one is relating to sanction list. So what are the official sanction list? OFAC, that Office of Foreign Asset Control. You can check the website for the OFAC. Then you can give the you can get the entire list for OFAC sanction list. Then UN Security Council sanction list. You can see that one with this website. Then European Commission. Then EOCN, Executive Office of Control and Non-Proliferation. This is a UAE government one sanction list. So these are the sanction lists available, readily available all over the world. So before having a business relation with the customers, what you have to do, you have to check the sanction list in that country, in the respective list. So first you have to check the OFAC, whether OFAC there is no sanction list. Then you go to the UN Security sanction list. You check in the UN Security sanction list. If it is nothing, it's reflected. Then you go to European Commission or EOCN or local list, whatever. So first, once you have checked everything, then if there is no sanction list of any of these countries, then automatically you can move to the next slide. So now we'll look at what is a tax fraud. What is the meaning of a tax fraud? What are the red flags? So tax fraud refers to the intentional action that a taxpayer commits to defraud the government of the tax dues. So it is unintentional. So it's a similar it's a fraud. So there is a tax evasion is there is a tax avoidance is there. Tax evasion is a subset of tax fraud. So the tax evasion refers to any fraudulent action that taxpayer commit to avoid reporting or paying a tax. So whatever the fraudulent activity you are doing, then it will automatically come as a tax fraud, tax evasion. So then tax avoidance, it's a legal means of lowering one's tax bill through legitimate direction. So there is a confusion is that tax avoidance and tax evasion. So tax avoidance is a legal one, but if that tax avoidance is it for intentional one, then automatically it will move to tax evasion. So you have to find out whether it is an intent of the taxpayer to wrongly pay a tax return or provide a false tax information will determine difference between tax evasion or tax avoidance. So main thing is a tax evasion. So tax avoidance is a legal thing, but again there is an intention for the taxpayer to wrongly pay. So in that automatically it is treated as a tax evasion. So we'll see what are the red flags for the tax evasion. So one is the books. So if you are maintaining a double set of books that is not relating to the tax book and the normal company accounts, instead of that one, double set of books for income tax purpose, for the tax purpose, you are showing a less profit and you are keeping another tax records, another record set of books of accounts for company purpose. In that case, it is a part of a tax fraud. And second one, if you are doing alteration, false entry or alteration or creating a false invoice in order to reduce the tax, then it is a part of a tax fraud. And if you are destroying books of accounts, then it is a tax fraud. And if you are concealing assets, then it is a tax fraud. And moving off the assets, taxable asset beyond government reach, that you are moving from one taxable country to another offshore company, then it is treated as a red flag. Then hiding income. That means covering up a source of income, you are hiding the income, then it is treated as a tax fraud. Then avoiding making that are typical in transaction of kind. That means unrecorded transaction, any unrecorded transaction. Then engaging or misleading or deceitful conduct. So whatever misleading act you are doing, then it's all related to tax fraud. So we have seen that the measures, we'll see what are the preventive measures. So these are one of the recommendations provided by FATF. So we'll see what are the basic, the meaning of the customer due diligence. So customer due diligence, the financial institution should be prohibited from keeping anonymous accounts or accounts in obviously fictitious names. So whatever the accounts they are opening in a pseudonymous or fictitious name, then the financial institution should not that will be prohibited from opening the accounts. So what are the things before entering into the customer due diligence? What are the things you have to see? First one is relating to a business relationship. So while establishing the business relationship, you have to check with the customer what type of a customer you are dealing. Second one, occasional transaction. So this is basically relating to financial institution and some of the DNFBPs. That means you are above applicable designated threshold. That means a USD or Euro $15,000. In that case, that means 55,000. In UAE, it has mentioned 55,000. So FATF, it is mentioned $15,000 or Euro. So whatever the occasional transaction you are doing, then you have to do the customer due diligence for that. Then occasional wire transaction. So one is relating to 15,000, then occasional wire transaction, carrying out occasional transaction, de minimis requirement, it is a 3,500 dirhams or Euro 1,000. This is specifically applicable for financial institution only. So you are transferring a wire transfer with 1,000 euro or less than 1,000 euro, frequently with a different parts of the country, then automatically it will trigger the AML part. Then, if there is a doubt relating to, there is a suspicion of money laundering or terrorist financing, then you have to do a customer due diligence in that case. Then, financial institution and DNFB has a doubt about the veracity or adequacy of previously obtained customer identification. You have obtained some customer identification details. Again, you have some doubts. So then you have to see again customer due diligence. So you have to see the customer's identity, UPO, then intent of the business relationship, then business and a risk profile. So what purpose they have, what's the intent of the business relationship? So whether it is just moving for the fund to another country or they are changing from a black to white money. So in that case, you have to see the customer due diligence. So once a financial institution, second one is a politically exposed person. So while doing a customer due diligence, in addition to the normal due diligence, you have to check for whether the customer or entity or any one of the top management is a politically exposed person. So you have to do a appropriate risk management of the beneficial owner. So if company is a beneficial owner, then you have to find out who is the ultimate beneficial owner. So whether that ultimate beneficial owner is a part of PEP or one of the relative of the ultimate beneficial owner is one of the part of a PEP, then automatically it will trigger PEP head. Then if once it is a triggered PEP head, then automatically you have to discuss with the senior management for approval in order to establish the business. Then take a reasonable measures like a source and wealth and source of funds. All these things you have to do. So once a PEP hit, then you have to go. First one is a customer due diligence. Second one is if there is a PEP hit, then you have to go for enhanced due diligence. That means it's a detailed due diligence. Again, you have to go. So what is the enhanced due diligence? So once KYC due diligence process that provide a further risk investigation, under KYC due diligence, you will find out that there is a high risk category or there is a PEP here. Then definitely then you have to go for an enhanced due diligence. So in that enhanced due diligence, you have to get to the UBO, then what is the purpose of the business relationship? And you have to update the CDD information, customer beneficial owner, then what type of a fund they are using, what's the source of fund, and who is the beneficial owner of that source of fund. And you have to do a detailed examination of the entire transaction. And you have to get the approval from the senior management whether you have to do a business relationship with the customer before proceed further, before executing your business. So this is called enhanced due diligence. So if you come to the virtual asset VASP, that means virtual asset and virtual service providers, you have to do a three-phase analysis. So three-phase analysis means at the initial stage, whenever you are doing a virtual asset transfer is with the counterparty. So whether that counterparty is a hosted wallet or unhosted wallet. So you can do virtual asset. If it's a cryptocurrency, you will be having the other party having either through exchange or you have a public account virtual currency account. Then you have to see whether it is a hosted or unhosted wallet. So you will be having a wallet ID. On that wallet ID only you will be transferring. At the second phase, you have to identify with who is the counterparty and the CDD measures you have to take. Then final stage, once you are done with the first phase, second phase, and third phase, then you have to see that a regulated authority, who is a regulated authority for that one, the respective wallets. That means you have to see the beneficial owner. So why this is a main criteria? Most of the fraud happens through virtual assets. So anonymity is the main category of the virtual asset. So if there is a crypto dealings are there, anonymity will be there. So your crypto address, it will not contain any name of the entity or any name. It will be only the numbers will be there. So it will be very difficult to find out who is the real owner. But there is a distributed ledger system. That means a public ledger system. You can see each transaction from the beginning to the end. You can trace the entire transaction. But only thing is that you have to take a proper due diligence before executing any virtual asset related transaction. So you have to phase 3, assess the counterparty and VASP, and you have a business relation. Then you have to do a due diligence for that category. So you have to find out who is a regulatory institution for that one, whether it is a hosted wallet or unhosted wallet. So there is a separate guideline issued by FATF for the virtual asset. You can go through that one, then you will get a brief idea about the virtual asset, how you have to deal with the virtual assets. So we will see, we have discussed about the customer due diligence. So we will quickly see what exactly one specimen form we have just created to understand the concept. So what is the KYC form you have to include? One, legal entity information relating to what is the company name, then which location it is located, then the company related information, which date it is established, then the telephone number, then fax number, compliance officer name. Then second category relating to who is the shareholders, then shareholders full name, nationality, then source of this information. Then again go to the second category. If it is a 25% more shareholding is there, then who is the shareholder of that company. Then board of directors information, senior management information, then authorized signatories information, Then details of politically exposed person, if any. So this information, it's a part of KYC. Then you have to go factor details. So whether you are filing for a US tax form, then the factor details, then AML questionnaire. It is relating to whatever we have discussed, then one by area wise, general AML policies, then risk assessment, then know your clients and receiving due diligence, then monitoring and review, then staffing and training, then taxation. So these are the things, the AML related question. Then there is a declaration from the client that is saying that whatever the information provided, and they have confirmed that one. Then what are the document required, like a trade license copy, articles of association, authorized signatory, PO is the power of attorney, is the VAT certificate. If beneficial owner, if the company is a beneficial owner, then you have to find out ultimate beneficial owner, then what is the shareholding of the ultimate beneficial owner. So all information you have to collect for the KYC. This is just for a CDD part. So it's not relating to EDD. EDD, it's again you have to do further information relating to the source of fund, what source of fund, whether they're audited financial statement, all this the information you have to get for EDD information. Now let us see the CDD threshold, that customer due diligence, what is the threshold for financial institution. If you are doing the occasional transaction, whatever the transaction you are doing for an occasional transaction, for financial institution, 15,000 USD or euro will be applicable for as per FATF, and the UAE regulatory authority, it is 55,000, same as it's a converted figures. And wire transfer, if you are doing a small wire transfer, and the de minimis requirement, de minimis it's a minimum 1,000 for FATF, and UAE one, it is a 3,500 equal to or exceeding 3,500. So in FATF, if you look at the FATF rules and regulations, in that it's mentioned that no higher than USD or Euro 1,000. Recommendation, you can refer recommendation number 16 of FATF recommendation. And if you see the Article 6 of the Cabinet Decision 10 of 2019, it has mentioned that equal to or exceeding. So there is a conflict, it's there, but still it is clearly mentioned about the wire transfer. And what will be DNFBs? So DNFBs are for three categories. One is related to casinos, USD or Euro 3,000, recommendation number 22 and 23. So in a UAE regulatory authority, casinos are not specifically mentioned in DNFBPs. And for precious stones and precious stone dealers, for whatever the occasional transaction, either it is a single or several transaction, USD or Euro 15,000, and UAE regulatory authority, it's AED 55,000. It's just a conversion 3.675. And VASP, virtual asset service providers, recommendation number 10. FATF, it's a USD or Euro 1,000, and UAE regulatory authority, as of now, it has not updated, so it will come with the same amount. So next one, we'll see AML training program. So every company, whoever may be, whether it is a DNFB or whether it is a financial institution, they have to conduct the AML training program in order to understand what type of transaction or what type of customers you are dealing with. So either it is you have to give a training either to the to the owners, then you have give a training to the staff, then you give a training to the senior management. So in case of AML related specialized training, you have to give it for AML related staff, because they will be the first front end of business to deal with the customers, to enter into the customer, into the business. So you have to give a special training to them for respective areas. So this is a must category AML training program. The Ministry of Economy is conducting various AML program. You must attend those AML program in order to understand what exactly the AML relating to. Next one is relating to record keeping. Financial institution and a DNFB, they must keep at least 5 years of the document. So document, it is what exactly the documents. It's a document obtained through CDD measures, whatever the document, KYC measures, local or international, then cash transaction documents, then business correspondence, AML or CFT training reports, STR, SAR reports. All this information you have to keep in the company. So the minimum period, it is 5 years. So what are the penalties under UAE Federal Law, Article 22 of Federal Law number, amended Federal Law number 26 of 2021? Individual involved in money laundering. If any individual is involved in money laundering, imprisonment 10 years and fine is 100,000 to 85 million. And individual abuse their influence or uses a non-profit organization or is involved in organized crime. So either the individual, one of the individual is involved in organized crime, or whatever the fund has been transferred to non-profit organization, then a temporary imprisonment or fine it is 300,000. Minimum fine is 300,000 and up to 10 million. Other fines. One is relating to financing terrorism and illegal organization, using a proceeds for terrorist financing. So if any category terrorist financing is involved, then a temporary or life imprisonment and a fine, Article 22, and the fine is 300,000 and not more than 10 million. And the second category, penalties for legal person. So legal person is involved. That means one of the representative of the legal person is involved in this one, commit a crime under this law, then legal entity can be dissolved and their offices closed, and the fine is 500,000 and AED 50 million. And violation for reporting obligation. So STR, that means a suspicious transaction report. If you are violating something and you are not reporting to the suspicious transaction report, then imprisonment and the fine ranging between 100,000, minimum fine 100,000 and not more than 81 million. And disclosure of confidential information. For disclosing confidential information to investigation or warning. So investigation team came for an inspection and you are not disclosing those confidential information, then fine is again fine 100,000 to 500,000 and imprisonment but not less than 1 year. And in non-compliance with the UN Security Council directives on terrorism and mass destruction weapon, in that case, imprisonment not less than a year and no more than 7 years. That means 1 to 7 years, and fine 50,000 and not more than 85 million. Other violations, if any other violation other than not mentioned above, then it is 10,000 up to 100,000. These are the fines. So once you see the fine, then you will know that how important you have to see the CDD and EDD, then how you are doing the business relationship with the customers. So now we have covered almost all areas, how the AML checking and everything. So we will see that the AML summary, what exactly we have to do. So first of all, you have to do a Go AML registration in the ministry, the respective regulatory authority we have already discussed. Then you have to appoint one compliance officer for that one. Compliance officer, it is like either within the company itself, who are maybe involved. It's not like the owner must be shareholder. Owner himself will be a compliance officer, then it will be very difficult to check all transactions, whatever happened between the company and the customers. Then you must have AML enterprise risk assessment and update. That means you must have AML enterprise within the company itself. You must have AML risk assessment relating to how you are categorize your customers based on a high or low, whatever it is. Then you must have AML policy and controls. You must keep AML policy and controls in place. Then you must have a KYC natural person companies. Then you must have name screen section. So this is the first stage. So once you are registered, so this is first 4 category, it is within the company. Then you have to do the KYC. So this is relating to within the company. You must have a AML policy, then AML enterprise risk management. Then you must have a compliance officer. Then you must have registered for AML. Then you have to go. Once you are done everything, then the KYC, then name screen section. So this is the first stage. At the first stage itself, you will get an idea whether the customer is a high risk customer or medium risk or low risk customer. So in order to understand that one, you have to do the next level. So we'll see the next level. One is a name screen. So while doing a name screen of the company, name screen means there are different sanction list, UN sanction list, then OFAC sanction list, EOC and sanction list, then or local list is there. Then once you are done with this sanction list, screening of the name screening of the sanction, then if your existing customer find out that it's a full match means it's listed in the sanction. So your existing customer is listed in the sanction, then immediately you have to freeze the fund, then block the transaction, reject the client, and mark it as a high risk category. If the new customer is having, after checking the KYC and name screen, then it is coming as a new customer, then again it is a full match, then reject the client, and it is a high risk category. Then once it is reported as a high risk category, you have to submit a fund freeze report to the FI, Financial Intelligence Unit. So let us look at a partial match. So once you check with the partial match, there is a high risk category, and suspend all transactions if it is a partial match. Then in that case, you have to submit a partial name match report. So you have to submit it. So first one, it is relating to fund freeze report because it's a full match category, sanction list countries, then blocked, you have to freeze the fund. So you have to submit a fund freeze report. So if you are not submitting STA fund these reports, then you will know what are the fine implied. Then if there is no match, then you can straight away you can do the next level, that is a risk-based approach. So risk-based analysis, we have already discussed that customers, then transaction wise, then service line wise, whether DGN codes, this category you have to analyze a risk-based analysis. So once initial KYC, you are done with the second level, second stage. So in this stage, you will get an idea whether it is a high risk category or medium risk category or low risk category. So this stage, once you are done with this stage, then you can see what is the next step. So RBA analysis, that is risk-based analysis. Then you have find out it's a customer, it's a high risk customer. Then once it is a high risk customer, then you have to do a EDD. That means enhanced due diligence. So you have to obtain source of funds, source of wealth, and ensure first payment through account in the client's name. Also seek a senior management approval before conducting a business. So you have to do a thorough EDD before proceed. Then low medium risk client. Then low medium risk client. Then once you are done with this one, then screening, ongoing monitoring, you have to screen the client again. So you have find out the areas it's a high risk category. Then you have to find out, you have to do a screening again, ongoing monitoring, you have to screen. In that case, whether if it is, again, you find out there is a money laundering or financial suspicion, then straight away you have to submit STR or SAR. So the initial second stage, there is a one report, or partial match report, then or fund freeze report. There is a reporting structure is under second stage itself. Then second stage, once it is crossed, then third stage. Third stage, it is again, it's a risk category, it's a high risk client, then it will come to EDD. Then if it is a low risk client, then again you have to do a ongoing monitoring system. Then in that one, you will check whether it is a money laundering or a terrorist financing activity involved, then automatically you have to submit STR or SAR. Then if the client's profile is changed, so previously last year profile, it is changed. This year it is again changed. Then what you have to do, again, you have to repeat the process from the KYC onwards, initial KYC, stage 1 onwards, you have to do the process. So finally, record keeping, 5 years customers, financial transaction, mandatory AML training, etc. All these things are important part of AML summary. So now let us have a quick view of the AML acronyms. So AML or CFT, that anti-money laundering and countering the financing of terrorism. CDD means the customer due diligence. DNFB, designated non-financial business and professionals. EDD, enhanced due diligence. So whatever the terms we have mentioned, we have given acronyms for this one. If INR interpretive not true recommendation, then R means the recommendation. So if any, these are the Any questions? We can, one question it's asked from Jay Verma. Considering that a CSB fall under DNFB, do they need to declare fund more than 50,000 on financial less than declare fund more than 50? So this is a DNF one question. Considering that a CSP falls under DNFBs, and do they need to declare fund more than 50,000 on FI or Go AML portal? See, financial intelligence unit and Go AML. So first one it is you have to register through Go AML. Once go through the Go AML, then financial intelligence unit you can submit the report. The main thing is that the fund is less than 50,000. Then you need not to do. But again, if that fund category is coming frequently, then it is a type of avoiding the report. So another question, same question, it's asking about more than 50,000, whether they have to report AML or DNFB. So if you see the CDD threshold area, there are two categories. One is a financial intelligence unit, and the second one is relating to DNFBs. In DNFBs, there is a precious stone and metals. So precious stone and metal, there is a category saying that $15,000. If it is a $15,000, then you must report to the authority. And other DNFB, then there is a cash transaction. We have already given that schedule, that de minimis requirement in a separate paragraph. Separate slide, it is relating to financial institution, then DNFB separately. That means the 15,000, whatever the cash transaction, then you have to report. That is basically, it is coming for a DPMS, that means precious stone, and that means the jewelers, then precious stone and materials. So these are the questions. So if any other questions, please write, or you can post it through email or social media or anything. And kindly rate our presentation and review us. And it is best to apply the knowledge every day, because ignorance of law is not an excuse. And you can through our social media, we'll post our webinar in that one. And you can social media page, so you can follow us on LinkedIn, YouTube, and Facebook, and you can email us. And whatever the reviews, you can just post it in Google. And we have released some of the videos relating to AML to understand each concept wise. One is relating to risk-based analysis, KYC, and due diligence. Just a 4 minutes video, and some areas the DNFBP are explained, then UBO we are explained, then AML, sanctions, what exactly DNFB, all these category we have explained for the AML. So you can just go through those videos, then you'll get an idea about that information. And for the corporate tax, we have published 5 videos. One is relating to the initial one, then second one is relating to the free zone, and the third one is relating to connected person, and fourth one is relating to set off of loss and relief, and transfer pricing. Part 1 we have released, and within 10 or 15 days time, then part 2 will be releasing. We will update through our social media when it will be happening. To conclude this webinar, at this stage, you should have a basic understanding of the concepts related to money laundering. This is only a tip of the iceberg. As always, you can find more information on this big topic on our YouTube channel or website under the resources video. And within a couple of days time, we will upload those videos. Then you can give your comment and feedback. Once again, thank you for joining, participating in this webinar. It's my pleasure. Thank you.